Alright, so let's begin the show. Mutual fund direct plans are for investors who want to invest on their own and not through a distributor. Now, they get the benefit of a lower expense ratio as compared to a regular plan. Now, this lower expense ratio results in comparatively higher returns over a period of time. Investments can be made on the online platform of the fund house or the registrar and transfer agent, which is an RTA. One can use generic platforms such as mutual fund utilities, stock exchange platforms, or other mutual fund platforms or portals. If the investment is being made from a distributor platform, one cannot choose direct plans. Now, while filing up the online form, the investor must choose or actively select the direct plan option. The bigger question over here is, how are direct plans faring? Which AMC has the highest number of direct AUM and why? Let's discuss all of this, and I'm joined by Suresh Sadagopan, founder, Ladder7 Financial Advisories. Suresh, good evening and welcome to the show. All right, so direct plans are in vogue. Even the AMCs are pushing for direct plans. We are seeing a lot of investor interest, and especially through fintech platform, we are seeing a lot of money coming in from direct plans. Now, I just want to understand which are the top rated AMCs with the highest AUM when it comes to direct plans. Do you have any data on, in your hands right now that you can share, and what could be the reason behind that?
As far as the top AMCs are concerned, you have SBI, ICICI, and HDFC. As far as SBI is concerned, it is about 56%. As far as ICICI is concerned, it is about 46%, and HDFC is concerned, it is about 40%. I'm talking about the top three. There are many other AMCs which have much higher levels of direct plan exposure. So what I would say here is direct plans are a factor of how they are acquiring clients or how they are actually focusing their products. Okay, so there are certain mutual fund houses like let us say a Nabi, or let us say a Zerodha, which has predominantly a direct to customer kind of an approach. In that, the direct plan level will be much higher than in the case of the other fund houses. So now let us look at whether, as far as the direct plan is concerned, it's a good idea or not. See, direct plan is good for those people who know where to invest, what to invest. Otherwise, you really require the help of some intermediary, whether it is a mutual fund distributor or an advisor, to tell you, where to invest. The data currently shows that 45% is in direct plan. A lot of them are DIY investors, and many of them are directly going through the route of the platforms. So I don't know whether the people who are going through the direct route through the platforms are really well served or not. It's for them to, of course, decide. But only looking at the cost and going to the direct plan is not a great idea. Or only looking at the returns and going to a direct plan is not a great idea. So, you will have to look at what is that you are investing in and whether that is suitable for you, and not only the cost aspect.
I don't think a lot of people are very conversant, with this fact. But okay, let's also highlight the kind of benefits one might get by going through a regular plan. There'll be a difference in the NAV. There'll be difference in the return, obviously, because you are dealing directly with the AMC, and handling everything on your own. But when we are talking about benefits that you get through a regular plan, what does that include?
So I'll talk both about the direct plan and going through an advisor, and I'll also talk about a regular plan. In the case of a regular plan, there is a mutual fund distributor who is actually getting a certain commission for services rendered. So typically, what is the service that a mutual fund distributor will render? So that services, they will understand what the goals are, they will understand what is the risk profile, and they will help put together a portfolio and choose an appropriate fund which is suited to that particular investor's goal or that particular investor's portfolio. So this is a very important thing. See, on the face of it, a lot of people who don't understand this thing, they will directly choose, for example, a small cap fund or a mid cap fund, and that may be way above their risk level. and that can really be a problem. So at certain points when small cap and mid caps are firing, it may look like a great decision, but not having an advisor can really be problematic. The markets have started falling, and you don't know where you are going to land. So it's always better to have somebody who can advise you. This is as far as the regular plans are concerned. Now, as far as the direct plans are concerned, in the case of a direct plan, you pay much lower charges because as far as the commissions are concerned, there are no commissions involved in a direct plan. So if you are going the direct plan route and an advisor route, you are going to directly pay the advisor a fee so that they will again understand what is your overall risk level, where do you want to go. They may probably drop a financial plan, and in line with the overall asset allocation that will be suitable to you, they will advise you where to invest. So whether it is a regular plan with a mutual fund distributor or a direct plan with an advisor, these two approaches are direct plan without any advisor or a distributor and doing it on your own may work for a very, very small sliver of people who are financially savvy. For most other people, they should either consider an advisor route or a MFD route.
All right. Uh, do we have any data that tells us the direct plans are coming up from where? Are we talking about B30 towns where the interest is more about for direct plans?
I don't have that granular level of detail, but as far as the regular plan, direct plan is concerned, I have this data that 60% is retail and 40% is institutional. Okay, and the other data is as far as okay, yeah, this is not about direct regular. Direct plan is about roughly 30.6 lakh crores, and regular is about 37.2 lakh crores. So those kind of data are there. Some bit of granular data is slightly missing. I mean, I don't know as far as institutional shares are concerned. Also, yeah, there is a bit of data which is available. I can talk to you about that. Um, I don't have that right now. So yeah. Yeah. So as far as the institutional is concerned, liquid and ETFs and FOFs, 88%, 89% is with institutional category. As far as equity oriented schemes are concerned, 88% are with retail. And as far as debt oriented schemes are concerned, again, institutions predominate, like almost two-thirds are with the institution. So that is the broad breakup. But overall, institutions is about 40%, retail is about 60% overall.
Uh, is it very tricky to shift from a regular plan to a direct plan if you're already investing, you already invested in a mutual fund or an
Yeah.
AMC, and vice versa also from direct to regular? Can you do that?
Yeah, so you can do that, but it is treated as redemption. As of now, there
Okay.
have been a lot of representations which have gone from the mutual fund industry. But as of now, it will be treated as a redemption, and then you will have to reinvest in suppose you're redeeming from a regular plan, you have to reinvest in a direct plan. So there is a tax implication as of now.
All right. Going ahead, do you see the direct AUM going much more higher than this?
See, I mean, in the entire industry, and there is a lot of talk of direct being good and regular being bad.
Exactly. Yeah. Yeah.
I mean, I'm an advisor. I would not really directly agree with that. See, the point is, do you have somebody on your side as an investor to advise you on that? So whether it is an actual advisor who is giving you direct plans, or whether it is a distributor, MF distributor, who is giving you regular plans, and they are getting a indirect remuneration for that, you require somebody to help you. You require a Sarathi. Without somebody really helping you, it is not going to be able to function. So it is wrongly understood in the industry, and it is bandied about. And I see a lot of calculations saying that you are saving zero point 0.6, zero point 0.7, and over a 20-year period, I mean, you will be up by, let us say, 5 crores, 5 lakhs, 7 lakhs. You'll be making more money like that. See, the moot point is, I mean, if you are making a wrong decision, you will be back by several lakhs. So that is something that we are not really talking about, right? So it is a question of whether the decisions are properly aligned with the requirements of that particular client, and that only proper advisor will be able to truly help you. So you need somebody, whether it is an MF distributor or whether it is an advisor, to help you. Doing directly on the face of it may look like a great idea in terms of saving money, but you may end up with the wrong plan, and everything can go haywire.
So very important, if at all there is some kind of hand holding that you need in your investments, regular plan or maybe going through a distributor could be the right way for you. As far as direct plan is concerned, you should be aware of the kind of homework that you need to do before you invest via direct plan. Thank you so much, Suresh, for being on the show and helping our viewers walk through this today. Thank you. We'll take a quick break, but post that, let's get your mutual fund portfolio queries answered by Pankaj Matpal. And in case you're watching the show live and want to send across your financial portfolio queries and want any kind of strategy from our experts, you can do that on our WhatsApp number. Send across your queries on our WhatsApp number, which is 865-797-4571. You can also email us your questions on themoneyshow@etnow.tv. A quick break, and after that, let's get connected with our viewers live.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.